Bank of Canada raises another 50 basis points as the Grinch stole Christmas. Oh yeah, we're talking about that in December. The next article that we'll be talking about is how Bank of Canada is actually losing money in the third quarter, even though they are our central bank. Why is that? And how silly does that actually sound, right? And the last one we have here is Remax comes out saying that prices are going to be where in 2023? Stay tuned to find out. Now, if you are looking for how to navigate this real estate market, and generally what's happening right now is a lot of my clients are people who are looking to make a move in the 2023 market. They're calling me now to get ahead of the curve to understand what's to come and how to navigate it with their own particular circumstances each. Then you can do so by booking a call with me using the link right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a Remax in the Greater Toronto area on top of making awesome real estate content just like this for you. And the first article we got here is Bank of Canada increases policy interest rate by 50 basis points, or half a point, half of 1%, continues quantitative tightening. That means now we're at 4.25% interest rate, and this was, I would say, a shocker to some, but not to most. I think that we're probably going to get maybe one more. That's my guess right now. I'd say like 60% chance we'll get maybe another 25 in January, and then maybe that's the end of it. I know some people think this is the end of it, but you know what? Honestly, no one knows. Like, everything is so fluid right now. Like, that's what I just keep telling everyone. No one knows where Bank of Canada is going to end up, and I don't even think Bank of Canada knows. Now, I do want to read through a little snippet that they had as part of their live meeting. It says, CPI remained high at 6.9% in October, with many of the goods and services Canadian regularly buy showing large price increases. Yes, have you seen how expensive romaine lettuce is lately? Holy cow, I should have just invested in that. Measures of core inflation remain around 5%. 3-month rate of change in core inflation have come down. Yes, that's great. An early indicator that price pressures may be losing momentum, meaning that inflation may be rolling off, right? However, inflation is still too high and short-term inflation expectations remain elevated. I don't think they're going to get it down to 2%. That's kind of what they're comparing it to. And the longer that consumers and businesses expect inflation to be above the target, the greater the risk of elevated inflation becomes entrenched. Meaning that if we as people believe that inflation is going to get worse, that inflation is going to get worse. It's kind of like a self-fulfilling prophecy, right? So that's why they want to hammer things down, potentially soft landing. I think it's a recession, so that we were like, okay, inflation's over. You guys have killed us. That's kind of thing, right? Now, this is something I find absolutely crazy. We are resolute in our commitment to achieving 2% inflation target and restoring price stability for Canadians. Like, if you actually think about it, like, why is it 2%, right? Like, you really have to ask yourself that question. So I don't think we're going to get down to 2%. And the question that everyone is always asking is like, when is it going to end? When is it going to end? And when is it going to pivot? That's the wrong question to ask. If you're talking strictly about the real estate market, the real question is how long, like the duration, are these rates going to stay high at? Because at, say, 5% interest rate right now, it's pretty rough right now. There's some irony in some of these things. So I create this little chart here for you. Not the prettiest writing, but you can see on the left-hand side over here, you got your February numbers, interest rates, and then right now on the right-hand side, this is what's happening. So on the variable side, back in February 2022, you can get like 1.5%, right? So 1.45. Right now, the variable is about 5.45 on most major banks. Here's the crazy thing. That is higher than the stress tests. So anybody who was like, oh, you know what? Don't worry. Even though your rate's at 1.5%, back in February 2022, that's plenty high. We'll stress test you at 5.25% because, you can probably afford it. Well, the interest rates are at 5.45. So you're on a floating Scotia, you're paying 5.45 and you are past the stress test, meaning you can't afford it anymore based on the stress test. Whoa, right? Now, if you look at the fixed one, you could get around somewhere between 2.5% to 3%. Now it's at 5.25, a little bit lower than variable, which is kind of strange, right? But either way, if rates stay elevated at the 5%, it's not going to be good for a real estate market, which is why when you look at the stress test, which is 5.25, everything we have is over the first stress test now. So that means everyone is being stress tested at about 7%, give or take right now, depending on what their contract rate. That is absolutely wild. So much for the rates are going to stay low for a very, very long time. Rug pull. Next article. Bank of Canada lost $522 million in third quarter, making first loss in its history. This says that they are the first time ever in 87 years to lose basically $500 billion. If you're wondering why our central bank is losing money, basically the amount of interest that they personally have to pay on the debt they have is being sent out there because the stuff they're holding is not collecting as much interest. That's effectively it, right? The crazy thing that I look here is that the losses don't affect the central bank's ability to conduct monetary policy. Obviously, it doesn't because they can still raise or drop the interest rates. So the fact that they can still control monetary policy, you have to just frame this in a different way, or I would try to frame it for you, right? So if I was selling real estate, it's the same thing as I can buy and sell all the real estate, and I can control how quickly I can make real estate happen and appear out of nowhere, just like they can do with money, and I can control the price of what that real estate sells for. So as a business owner, I am losing money even though I have the ability to do that. That would make me a terrible operator. No? That's essentially what's happening in the Bank of Canada. It's just that bad. The thing that kind of like strikes me and it's really kind of mind-bending is, look, these guys are saying that this is basically accounting concern that they can just swap some stuff around, right? So basically an asset and liability swap. I'm not going to get too much into it, but this whole thing, this shenanigans is just how ridiculous the economy is right now. Our central banks are bleeding money, but they're still raising interest rate, meaning that they themselves have to pay more interest. At some point, someone's just not going to trust what our dollar is worth, and that's why people are investing into kind of Canada, and then we're going to have a currency problem. Yeah, crazy. Anyways, if this is the type of content you enjoy, make sure you smash that like button and subscribe to the Prime Property channel. And make sure if you are looking for some help on how to navigate the real estate market in 2023, you can book a call with me using the link right here. It's www.chatwithzen.com. All right, we got the last article here, which is basically a Remax kind of outlook for 2023 is going ahead. I've always said that I think Remax actually is pretty accurate in terms of where they kind of outlay a lot of things. And I always just also said that you just want to take out the grain of salt because sometimes maybe they're kind of pumping up the market because, again, they are a brokerage. They are my brokerage that I'm associated with, and they make money when the brokerages make money when there's a lot of real estate sales, meaning that they should pump it. But however, they're actually saying the opposite thing. So maybe this is actually a little bit more legit and we can trust them a little more, right? They've been pretty good, right? So if you look over here, we're basically in the Toronto area, which is us, Greater Toronto area. So it is saying right here that prices are going to drop by 11.8%. That's what they're predicting by the end of the year. And that sales are going to come down to about down another 40%. That's going to be really, really low. So their expectation right now is that prices come down. We're going to get less sales than what we have right now, meaning that 2023 is probably going to be a worse year than what we saw in 2022. So if they are, kind of quasi-correct in kind of where the numbers are, they're a little bit off from what I can tell. Let's say this comes down from 11% from $1.2 million, right? That should put us around like $1.05 million or so. The last market watch video I put up was yesterday, which puts the GTA average at I think $1.09 million or so. So let's say it comes down 10% from there. We'll still be hovering around like the high 900s. Does that make things affordable? No. Is it going to be affordable while rates stay elevated? No. Could there be a possibility maybe rates do come down, like some people think at the latter half of 2023, that makes prices, actually more affordable? Yes. But when the rates come down, are prices going to potentially go up? Maybe. Who knows, right? Because they're projecting that the prices are going to come down 11% as of 2023. It doesn't say when the date is, right? So we'll call it the end of the year. What do you think? Do you believe Remax is correct that it's going to be minus 10%? I know some of you may think it's going to be minus 30%. Some of you want minus 50. I think some of you will think it's just going to stabilize. And again, nobody knows, right? Because everyone can just make the predictions. Do you remember what happened during the pandemic when everyone's predicting a certain percentage drop in prices and we went the other way? This is why the prediction business is absolutely BS. Don't believe anything you say. Just do your own due diligence. Anyways, hope this gives you an idea of what's happening in the real estate market. If you are looking for some help, you can book a call with me right here, www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.